going to be talking about prepping for your trading. Um, it's done. It depends on what trading session you're going to participate in. If you're going to do the Asian session, it starts at 9. So you do your prepping an hour before. So 8 a.m. Tokyo time. If you're doing the London session, then do it 8 a.m. London time. And then for the US session, since I don't trade it, I'm not really sure. But if you're going to be trading USD JPY, which has a correlation with gold, the gold market opens at 8 a.m. New York, so maybe 7 a.m. would be a good time to prep. Uh, yeah, 7 a.m. 8:30 New York time also would be the time when the economic data is often released. So before the data is released, you have to have done your prep already. So what do you do when you're prepping? You just want to have a general idea of what's going on in the market. So usually for this, I have this really almost blank chart. All I have are the fractals and parabolic SAR. These are the two indicators on this prep window. So what are fractals? Fractals are the highest or lowest points between among 5 candles. So here, there's a fractal here, and there are 2 candles to the left and right, which are higher. So they represent, they're significant in that fractal breaks or movements beyond the fractal would signify a change in direction. What else? Okay, so you have to be aware that what do you call this? A movement beyond the fractal should be significant enough for you to consider it a fractal break. So for GBP USD, I find that 70 points would be considered a significant fractal break. So for example, here, if it broke the price broke below this fractal, it should have broken 70 points below for you to consider it a fractal break. For USD JPY, 20, just 20 points. So from there, you would gather the fact that GBP has a higher volatility than the USD JPY pair. So that would mean you have more chances of earning, for example, with the same number of lots, you have more chances of earning more with GBP, but you also have the same chance, you also have those chances of losing that much. So that depends on your personality, whether you want greater volatility or lesser volatility. But it would all boil down to the same thing, same profit anyway. If you do your risk management right, or your money management right, you'll be training with smaller lots with GBP because of the higher volatility. But that's for another lesson. So let's stick to the prep. So what else? Fractals are there. You will see the patterns here. If you're a pattern person, uh, you would see patterns. For example, let's see. Here, just choosing all those up fractals on the H4, and then here I choose the bottoms. You would see that it's kinda in a channel, so there is a movement down, and your next target, if you're selling, would be somewhere here once it touches this line again. If you're interested in patterns, you can read up on harmonic patterns. There's a lot of material on the web about harmonic patterns. It's a technique that I don't use because I'm not good at patterns. But if you are, those guys who trade it would be the ones who catch the lowest points and then exit at the highest points. So it's a good technique if you master it. Okay. You can see the triangles here or the pennants if there are any. So if your the price range is, what do you call this, sorry, if the price is trading within a range, like in this case, you would see where your supports and resistances would be. Let's see, let's try JPY 30-minute. If you check it out, you will see that it's in consolidation. You have the upper range and the lower range. So you would expect price range to be trapped inside this. So you would want to sell from here or buy from here. Okay? And your stop losses would be on the outer bands if you're trading a ranging market. So anyway, back to the what what did I do? I lost the parabolic SAR. So anyway, okay, parabolic SAR, what does that tell us? It shows you if the price is below the parabolic SAR, then it's bearish. If it's above, then it's bullish. So you would use the parabolic SAR during trend changes. So for example, here it was going up, 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 and then it went down and broke PSAR. So you would have had your stop loss somewhere here, and then it went up again, broke the PSAR, and told you it was still going up. So basically, it just tells you if it's bearish or bullish. So this is just all to give you an idea of what's going on. And you do this for all time frames. Just take a look. You won't remember it, but your subconscious will. So you will see here for the weekly, it's bullish. And then you see here a pincer-like pattern. That would tell you that on the weekly, it's going up. Monthly is still bearish. You would see that it's in consolidation. So as you grow smaller, as you go to the smaller time frames, you'll have a better idea of how you're going to trade for the day. So I usually use the H4 as my base time frame. So if it's moving downward, then for the day, unless it hits support, I would be bearish. I would be looking for bearish trades. For GBP, I think the best time frame to trade it would be 15 minutes. So, for example, here I see it's bearish. I would switch to the when I'm going to trade, I would switch to the 15-minute time frame and look for bearish a sell opportunity. Okay, that is the first prep window. It's just to give you the bigger picture. It takes 5 minutes to do it. Okay, next video I'll give you another preparation technique.